In today's Forex midweek outlook, we are discussing the DXY, the euro, the pound, and also gold as we head into a highly anticipated Fed rate decision today, literally just hours away, and also the monthly close just 24 hours after that on Thursday. So I'll have all the details in today's video. And guys, if you want my help with your trading, including real-time market updates, seeing my trades live, daily updates in the market, including trade setups and also VIP-only videos, as well as the full course, be sure to check out the link in the description of this video for 85% off lifetime access to VIP. It's all held in Discord, so it's real time. I'm in there every single day. I'm the most active member in there. And if for whatever reason you don't love it, just let me know within 7 days of buying and I will refund every penny. Okay, so let's kick things off, guys, with the DXY here. Looking at the 4-hour time frame, we've discussed the higher time frames before, so I'm not going to go through that too much here. I am trying to get this video out before FOMC, which might sound a little bit strange. Why would you do that? Because things are going to change. But the thing is, guys, if you have your levels outlined prior to events like today, then you know it's just a matter of really over-under on the high time frames. In other words, here for the DXY, we have this area around 99.35 that we've talked about. We discussed this yesterday. You can see that we have these highs up here. We have this ascending channel where the DXY is currently trading above. Now, the question, though, is do we see the DXY hold above here through the day's close, through FOMC, or do we get a sustained break back below? And one thing to consider here for the US dollar index is the fact that we have these sell-side imbalances that have been created here prior to today's Fed decision. So you can see down here, right around 99.0, 99.6, right off of these highs back here, we have these two single prints in the market where the market's been very little time, very thinly traded through this area. So we could see a sweep down here, especially knowing that we have that Fed rate decision coming up. So this is something to watch here, guys, where even if the DXY does hold above here on the high time frames, I think at a minimum, what we probably see from this market over the next 24 hours is probably a sweep down here into this area to liquidate early longs here going into FOMC and potentially then from there get a bounce. But again, the key here for the DXY, I can't stress this enough, is what do we get over the coming hours and really the next 24 hours? Does the market just sweep this area down here and then close right back above, right on the high time frames? Because then that could be bullish for the US dollar. Or do we get a sweep down here and see the DXY start to close down here in this region, okay? If it does and it flips 99.35 back to resistance, then that could be a sign of a larger pullback here for the dollar, because keep in mind that even though this rally has been very aggressive, we also now have several imbalances down here in this area. All right, so for me, guys, it's a matter of, again, do we sweep this area and then snap right back above here to base above this on the high time frames, or do we clear this area and then flip this region back to resistance, making this a failed breakout and get that larger pullback from the DXY? All right, so obviously time will tell, and today's Fed rate decision, guys, I am not going to be trading these markets until things settle down following the volatility. All right, so looking at the EURUSD, we have the market breaking below the March trend line here this week. So, very aggressive breakdown from the euro. Bulls really didn't put up much of a fight at all. You can see here on the 4-hour time frame, we got a slight bounce right here at this key level. However, again, for the most part, it was just straight down here for the euro, which has also created several buy-side imbalances here for this market. Okay, so, right now, guys, the key for the euro, you can see here it is sitting at support down here off of this 114.50 area that we've talked about. So this here is going to be your key support for the euro, and resistance up here is 115.85. Now, like the DXY, we have these imbalances up here created just before the Fed rate decision. So at a minimum, I would expect to see the euro come up here and clean these up within the next 24 hours. From there, though, guys, what this is going to come down to, in my opinion, and this really lines up with the DXY at 99.35, is going to be things like this low back here, which lines up with this imbalance around 115.18. Because if we see the euro come up here and tag this area and then just sell off from there and break 114.50, then we know that the next leg lower is probably in and we're headed lower here for the euro. Okay, now if we see it come up here and tag this area and then base above this low right back here, right, base back up here in this area on the high time frames, then we're looking at a 115.85 retest and potentially a sweep of that imbalance around 116.16. Okay, so right now, guys, again, we'll have to wait and see what we get from today's Fed rate decision. And also, again, I would not advise trading before that Fed rate decision because we are likely to see a lot of volatility. And on that note too, guys, don't be fooled if you're new to trading, if you're new to these Fed rate decisions, that the Fed rate decision is at 2 p.m. Eastern. However, the press conference at 2:30 is typically the market mover. So even if rates don't change, expect for there to be a lot of volatility around that 2:30 p.m. press conference, as there typically is. Okay, so looking now at the pound GBPUSD, this market also broke a significant trend line here recently off of the 2025 low. So we've discussed this before. You can see the retest through here. This was also a bearish engulfing candle in that retest. And since that time, it has been straight down here for the pound. Now, this market is approaching key support down here right around 132.40, which you can see that back here, we had the market going sideways for several weeks. We had this sweep of the lows, reclaimed it, support, okay? So this area down here is going to be key support here for GBPUSD. You could even call this a confluence of support simply because off of these recent highs up here, right? You could technically do something like this here off of these highs and call this region down here your support area. So again, this lines up with that area around 132.40, right? Those lows back here. So this is going to be a significant moment here for the pound to determine if we see some relief here following this very aggressive sell-off. However, just keep an eye though on the DXY though. I really can't stress this, guys, that this area through here, those June highs and the top of this channel in the DXY are very, very clean. Okay, so what we get from here on the high time frames, in my opinion, is really going to dictate what we get from the euro and the pound as well. Now, looking at GBPUSD, we do have these unfinished auctions down here off this low. So there is a chance we could see a sweep down here, but I think that's kind of pushing it right now, considering the fact that these are protected by that 132.40 area. All right, now, as for resistance, we have 133.80. You can see that we had these lows back here, and we saw the breakdown below. Today's high is right there off of that mark. Okay, so you've got support down here, 132.40, 133.80 resistance, and also, potentially moving in the context of this descending channel now. All right, so we'll have to wait and see there. Really not much to do here, and I would not be interested in longing the euro or the pound unless we saw some significant high time frame reclaims. Now, looking at XAUUSD, guys, we talked about this yesterday, so I'm not going to spend too much time, especially talking about that weekly candle from last week. But ultimately, we saw this market break down below its May trend line. So off of these lows down here, you can see a very clean break, very clean level here, and a clean break so far this week. However, we have not had a retest. Now, nothing says that you're guaranteed to get a retest. However, we have the market still just going sideways here. So typically in a sideways market, you will get a retest. Secondly, guys, we have the support level down here around 132.85. Now, this down here is what's called a poor low or unfinished auction. So we could get a sweep down here in the next 24 hours. How the market reacts there, though, on the intraday timeframes is going to dictate whether we see a gold rally here to come up here and take out this buy-side imbalance or single print up here off of this low around 33.51. Now, as for me, guys, I am interested in shorting this market following the breakdown if the US dollar stays constructive. However, like I said yesterday, really, if you look at the weekly time frame, last week's upper wick, okay, this right here is enough to make me hold off on trying to short, because I don't want to short here, even at 33.51, guys. The issue trying to short there is that last week's upper wick has not been even partially filled. And again, no guarantees that we do get that. However, in a range-bound market like this, 8 times out of 10, maybe 9 times out of 10, you do get a partial fill of this wick. And like we talked about yesterday too, you can see here that long upper and lower wicks on the high time frames tend to get filled by about 50%, if not the 618 fib. You can see that back here off of this upper wick, right? This was exactly the 618. You can see it right there. This retest, 618. Now, this over here, if we take a look at this upper wick from last week, okay, and do the same thing, you can see where that single print, that imbalance at 34.04, lines up exactly with the 618 fib once again. Okay, so kind of telling. Now, as I mentioned yesterday, though, you might be looking at this chart and thinking that how are we going to get all the way up there at 34.04 if gold right now is holding below this trend line, right, all the way down here? How are we going to get up here in this area if the trend line is right here? And again, I have to stress that there is no guarantee that we do see a retest up here. However, keep in mind, though, that if this were to become just a rounded retest where we see gold, going sideways for a bit, because keep in mind, there's a lot of price action through here to where this is going to be support. You've got resistance up here. If we see gold just go sideways for a bit into August and then retest this level, if we get a retest over here, guys, look how close we are now to 34.04, right? It wouldn't take a lot to wick up here, satisfy that level, and then get that sell-off. So we'll have to wait and see how this goes, guys. I don't want to speculate too much here, get too ahead of myself, because obviously this also depends on what we get from the US dollar. Okay, so right now, again, I am looking for, waiting for a short up here at 34.04, but I really don't want to be shorting this market anywhere down here in this area, because we do have this imbalance from last week's wick. And one of the things here too, guys, because we are about to finish up the month of July, if you look here at the monthly, right? Same concept for those weekly wicks. Look at this wick here. You know, you look back here, right? We had this wick here that was partially filled in. We had this wick partially filled in. We had this wick up here partially filled in. And this is what I mean by a range bound market. You tend to get these wicks filling in at least partially. And now we have this long upper wick back here as well. Okay, so again, you know, this kind of just highlights the fact that going into August, I would like to see the market come up here and take out some of these areas, preferably 3404 to look for shorts from there. And then from there, guys, if we do get a bullish US dollar going into August, then from there we could see gold come down here. We talked about this yesterday too. This is a trend line that we discussed here off of these yearly lows going back to 2024. And speaking of these long upper and lower wicks on the high time frames, if you'll notice here on the monthly, right, this candle back here, this was essentially an indecision candle. We had this long upper wick, long lower wick. We have seen this partially filled in. However, we really haven't gotten much down here. And that's why this area down here in August, if we were to see a bullish US dollar, this would be very appealing. But again, I'm not going to short this market unless we see that area around 3404 taken out first. All right, so I hope this video has helped. If it has, be sure to subscribe to the channel and also hit that like button. Be careful with today's volatility, guys, both with today's Fed rate decision, also the monthly close on Thursday. And if you guys do want my help with your trading, be sure to join us in VIP. Check out the link in the description of this video. Trade well out there, and I will talk to you again tomorrow.